Hello, everyone, and welcome to the webinar. My name is Scott Mendenhall. I'm the Deputy Director here at Department of Revenue, and so glad you joined us today. I'm standing in on behalf of Director Brendan Beatty, who's off doing his other thing, which is he's the mayor of Flat Willow, Montana, which is over by Willow Creek. No, not Willow Creek, Winnett, excuse me. And he's branding calves in between rainstorms. So he sends his greetings. And we're very thankful that you are with us today. And so this is a second seminar that we've reached out to legislators on. The first one is rebates. We'll try not to be too frequent about this, but today's seminar is on a pretty hot topic, as you very well know, on reappraisal and reassessment of property taxes. And so we wanted to be sure that we reached out to you. We see you as partners in this endeavor as you set laws and we carry them out. We want to make sure that our citizens and your constituents are very well apprised of how this works. And it can be somewhat of a confusing situation. I always like to think about our mission here at the Department of Revenue under Director Beatty is that we want to be the nation's most citizen-oriented, efficiently administered state tax agency. And so everything that we do is driven through that lens. I want to say to each of you legislators that are on here today or might be watching later, thank you for your service. We appreciate working with you during the regular session and looking forward to a very productive interim as you're back and forth. Some of you were able to attend some of our lunch briefing sessions during the first part of the session. Just wanted to extend an invite. If you're coming to town, going to be here for interim work or otherwise, and you would like to learn a bit more about what we do as an agency around tax policy topics, etc. There are several of you that want to reach out to us at a time, what have you. We would love to meet with you, host you here for an hour or so briefing on some tax topic, or we also regulate, as you know, cannabis and alcohol. So if those topics are of interest to you and you would like to have a setting that is a little more casual where you can ask questions, we'd be happy to have you here. So do reach out to us. We'd love to have you over here at Department of Revenue. The goal of the webinar today is education on our Department of Revenue reappraisal process, how property taxes are determined, and how that relates to then eventually this fall, people's property tax bills. And so a lot of confusion around that. I'm sure that you're receiving lots of questions from constituents. We certainly are receiving lots of questions because our reassessment notices just went out. If you're like me, I opened mine last night and I looked down through there and I almost wanted to call somebody, but I didn't know who to call. It can be pretty alarming and understandably so for citizens. And so we want to make sure that you are equipped to understand that the best possible, know the resources that you can point constituents to. And we'll do a better job of citizen service in through that. Logistically, first of all, as you log in on the upper right-hand part of your screen, there are three little dots. And if you would please, there's a routine up there where you can rename yourself if your full name isn't listed at your screen. We'd appreciate that you just put your full name there through the renaming. We're going to have shortly, I'm going to shut up and hand it off to the experts, a narrated PowerPoint presentation. We have experts from our property assessment division that will be presenting. We also have a panel assembled to answer questions. So if you have questions, we invite you to use at the bottom of your screen the Q&A box and just field your question there. And then we will have panelists that will elevate those questions and answer them either on the spot, or if it's more complex, we'll certainly get back to you in very short order, maybe with an individual email if it's longer or more complicated for the purposes of the webinar. So use the Q&A box at the bottom to field your questions. This is being recorded for later use. It takes a couple of hours for Zoom to get that finalized, and then we will share a link to each one of you via an email so that you can look at it later, or if there are legislators that are not able to attend here today, they can view it later. One final thing, just we had something come up just yesterday. In the world that we're in, there has been a text hack. Someone over by Townsend reported that they received a text message purporting to be Department of Revenue or to point people to a link where they could view their assessment notice. That's not valid. Please, if you hear about that or if constituents reach out, we're not reaching out to people in that way. So be on the outlook for a text hack. With that, I'd like to introduce the division administrator for our property assessment division, Corey Hoffland. Corey Hoffland has been with the agency 30 years, and I'm sad to report that he's going to be retiring at the end of this year. Corey, you've done a great job serving the state of Montana and Department of Revenue, and I'm glad that you're here today because you have a lot of expertise, and you'll be joined by your counterpart, Bryce Kotz, who also works in the property assessment division. So with that, I'll hand it off to you guys to present. Thanks everyone for being here.
Thanks so much, Scott, and good afternoon, everybody. It is bittersweet, but I've been here a long time, stayed with one agency for, I'll be over 30 years by the time I get to the end of the year. And it's a testament to this organization that you stay someplace this long and the work we do. And I'm very proud of the work we do and glad to be here with all of you today. So thank you all for joining us. We wanted to present to you what we're going to be presenting at our public forums around the state, as well as 4 webinars that we'll be hosting for people who won't be able to join us live in person, and also give a little bit more information detailing estimated taxes and the role that the Department of Revenue plays in the property tax arena versus the local government. So we'll be covering a little bit of that stuff. So as Scott said, if you got questions, go down to the chat bar below and get us your questions, and we'll try to answer those the best we can. So let's just start right into this. I guess the first slide is our regions that we have broken the state up into. Any of the counties that have the city highlighted in red with a red diamond beside it are offices that we man full-time. The counties that do not have a full-time manned office are covered by staff in the adjoining counties. And for many of the counties where we don't have full-time staff, we do maintain office hours. So we do have exposure to those counties, and we still work closely with those county governments. Our contact information for the main offices is on the map as well. And then below that, we've also given the contact information for our regional managers who ultimately oversee the entire regions, as well as our area managers in specific areas within those regions. And this map is also available at mtrevenue.gov. So you can find it there as well. Wanted to talk a little bit just to give some flavor of what we do and what we don't do. Here at the Department of Revenue, the Property Assessment Division, we value property at 100% of its market value as directed by the Montana State Legislature. There are some states that assess property at something less than 100% of market value, but Montana is a 100% market value state. And then we also classify property so that we can determine the taxable value. And the market value times the tax rate, which is set by you, the legislators, equals your taxable value. What we don't do is we do not set mill rates, and we don't deal with the calculation of mills, and we don't oversee those functions as well as what's voted in by the local citizens in that county or that local jurisdiction. And we don't tax the property. The local governments, your county treasurers, are the ones that calculate the tax bill, send it out to the taxpayers, and then collect those property taxes and distribute them to the proper jurisdictions within the counties. We will get into a little bit more detail on this as we get deeper into the presentation. Just some property tax basics. Property taxes are an ad valorem tax, which means that it's assessed based on your proportion of value to the entire entire county. So your assessed value times the tax rate equals your taxable value. And then that taxable value times the mill levy equals your general property taxes. And then there are also fees and specials that can be added to those tax bills by the local governments as well. Legislative decisions govern the three components of the property taxes. The Department of Revenue determines the assessed value, the legislature determines the tax rate and exemptions, and then local governments determine the mill rates, any specials and fees, and they set those mills according to statute. So we've talked a little bit about market value and the fact that we assess market value at 100%. This is defined in statute at 15.8.111 Montana Code Annotated. And basically, much like other texts that you'll see, the market value definition is the value at which property would change hands between a willing buyer and willing seller, neither being under any compulsion to buy or sell, and both having reasonable knowledge of the relevant facts. So if we get a sale and it's between relatives or family members, that would not be willing buyer, willing seller, and there is some compulsion there. So we would say that that is a sale that we would not include in our normal process for developing our models. I talked a little bit about the fact that Montana is a classification state. Currently, there are approximately 17 property tax classes. The legislature assigns the tax rates to each one of those classes and defines who goes into each of those classes. And the tax rates range from 0.29% on the low end up to 15.12% on the high end. Tax rates may be adjusted for certain tax benefits, such as exemptions, tax abatements, tax assistance programs. Again, a complete list of all of the tax classes and the definition of those and the tax rates are available on our website at mtrevenue.gov. I'm going to turn this over to Bryce, and he's going to get into the local government budgets and mill levies.
Thanks, Corey. So as we've mentioned, there's different people playing different roles. Our role is the valuation of the property. To determine what those actual taxes will be are determined by the local governments and taxing jurisdictions found throughout the state. This is done through levying mills against our taxable value. For those not familiar, a mill is equal to 1/10 of 1 cent. Or in other words, for every $1,000 of taxable value that we have on a property, 1 mill would equal $1 in property taxes. In addition to those local government mills, there are some mills levied at the state level for various purposes, those being the 95 school equalization mills, and then the 6 university mills, which those 6 university mills are voter approved every 10 years, I believe. And then there's a handful of counties that have either technical or vocational schools that have an additional 1.5 mills levied. So there are limits on what those local governments are able to mill and how much property tax revenue they are able to generate. And that's really what we try to emphasize to taxpayers as we're talking to them about their assessment notices, that if you saw a 40%, 50% increase in your assessed value, that is not necessarily going to equate to a 40 or 50% increase in the actual property taxes you're going to pay. Again, this is all set out in statute in 1510-420. Essentially, those local governments, with some exceptions that we'll get into a little later, are limited in what they can increase their property tax revenue to from year to year, and that's equal to 1/2 the average rate of inflation for the prior 3 years. So whatever their property taxes actually assessed in the prior year were, they can only increase those by that half rate of inflation for average for the prior 3 years. The exception to that is if they want to increase it above and beyond that, they have to go to the voters and get those approved by the voters to do those increases. As Corey mentioned, what we're dealing with and what the mills are applied to is ad valorem, or what we consider general property tax. On the property tax bill itself, there are some additional special assessments and fees that are added by those local governments or taxing jurisdictions, in addition to those ad valorem taxes that comprise the total actual tax bill. So here we just wanted to run through a little example of how that floating of mills actually works. So for this example, we're just sticking with a very basic, simple taxing jurisdiction. And we're going to assume that that average rate, that half average rate of inflation over the prior 3 years is 2.5%. So in this example, we're going to say that the prior year, 2022, total taxable value for the taxing jurisdiction was $12,150 of taxable value. So again, a mill being 0.1% or $1 per $1,000 in taxable value. For 2022 in this taxing jurisdiction, the value of a mill would have been $12.15. We're going to assume that that local jurisdiction levied their maximum number of mills, which was 500 mills. So their property taxes actually assessed for tax year 2022 would have been $6,075. So that kind of becomes our starting point for the next year. Again, they can only increase their budget by that half rate of inflation for the prior 3 years, which in our example is 2.5%. So we take that $6,075 that they actually assessed in the prior year, add 2.5% to it. So our starting point for 2023 is going to be a maximum property tax revenue of $6,226.88 for that taxing jurisdiction. So now we've gone through reappraisal. We can see that our we saw a 50% appreciation in the market. So that taxing jurisdiction now has a taxable value of $18,225 in taxable value. So again, our mill is now worth $18.25 per mill. Again, that's a 50% increase over the prior year. So to calculate what that county's maximum mill that they can levy is, we're going to take that maximum property tax revenue of $6,226.88, divide it by our value of a mill, which is $18.25, and that gives us a maximum mill that that taxing jurisdiction can levy of 341 mills, essentially. So even though property appreciated 50%, the local government has to float their mills down approximately 32%. So they're going from 500 mills the previous year to only being able to levy 341 mills in 2023. Again, in addition to the local mills, there are the state mills for school equalization and the university mills, and those do not float. So that revenue is going to go from $1,227.15 up to $1,840.73 for 2023. So how does this break down to an individual property? In our scenario here, we're going to assume that this levy district or taxing jurisdiction consists of 3 properties. In this basic simple example, we're going to just say all 3 properties were valued the same. They all saw a $150,000 increase in value or a 50% change. But with those local mills floating down, if we look at the last 3 columns here, we can see that the local taxes with those mills floating down are only increasing $50.65 or 2.5%. The state mills, since they do not float, the state portion of taxes are going to increase 50% over the prior year or $204.53. But our total tax increase for these taxpayers would be $255 on the year or approximately a 10.5% increase. So even though their property appreciated by 50% in value, their actual tax bill would only increase by about 10.5%. Again, that's a real basic, simple example. We're going to look at one more quick example, and this is more how you would see things in the real world. as all property is not appreciating at the same level or the same rate. So in this example, our first property was valued at $225,000 in the prior year. That value increased $75,000 or 33%. If again, we look at those last three columns with the local mills floating down, we can see that they're actually, because their appreciation was slower than or below the average for that taxing jurisdiction, even though their property appreciated 33%, in this example here, they're actually going to see a decrease in their tax bill. If we look at the third property, here's a property that went up $225,000 in value, or 60%. Since this property appreciated at a higher rate than the average for that taxing jurisdiction, they're going to actually see a tax increase above that average of 17.86%, but still well below a 60% increase that they saw in their appreciation for their property. Again, this is a very simplified example. You know, in the real world, there's things to consider such as newly taxable TIF districts, permissive levies, voter approved mill levies, either prior ones or new ones, that all factor into that equation and are going to determine what an individual ends up paying in the tax bill. I'm sure you've probably seen this chart before, but this is just a breakdown of where those actual property taxes end up going. As you can see, between the state mills that ultimately go back to the school districts, the local school mills themselves, and the countywide school mills are making up the majority of a individual's property tax bill, with the remainder going to either the county, the city, or the miscellaneous fire districts and other miscellaneous districts that exist. Next, we wanted to take a quick second and just show you the website and a few things you might be interested out on our website. Again, our website is full of good information on how we value property, the different classes of property. So either you or your constituents can always come out to our website and find some good data or information on how we value property. I just wanted to point out a couple things that might be of interest to you as legislators. The first that we'll talk about briefly is on our landing page. You'll see for property owners, there's an option here for property appraisal notices. This has good information available for people that kind of walks them through the different pieces of their actual assessment notice, what that piece means and how to find more information on it. Kind of the hot topic currently that you've probably heard from some of your constituents is this estimated taxes that show up on the assessment notice. A little explanation behind this and some history on it. So in statute, we are required to provide the prior year's mill levy on the assessment notice. And the purpose of providing that prior year mill levy is so that a taxpayer has the ability to try to estimate what their potential. Let me see, it sounds like maybe the website is not displaying. Okay, let me back up real quick. I guess not everyone could see that. So again, our website, mtrevenue.gov. On the homepage, there's a section under helpful links for property owners, this property appraisal notice. Scroll down, it will walk them through their notice, or you through your notice, and what the different pieces mean. Again, back on the subject of estimated taxes, which is causing some concern amongst taxpayers out there. We are, again, required to provide the prior year mill levy on the assessment notice. That's in statute. so that taxpayers can get an idea or at least a rough estimate of what they might expect to pay in property taxes or their ad valorem property tax. Starting in about 2017, based on feedback from prior years that our office has received when talking to taxpayers, they had difficulty trying to calculate that or do that calculation themselves. They didn't understand mills. They don't understand a mill represents 1/1000th of a dollar. They didn't know how to properly move the decimal place. So when they tried to calculate their estimated taxes themselves, they were coming up with incorrect, usually very high calculations because they weren't moving the decimal place, or they were just looking at their taxable value and assuming that was what their actual taxes were going to be. So for clarity and to try to ease that confusion starting in 2017, we just decided it was best if we did that calculation and provided it for them to, again, add clarity, avoid any possible confusion. As we just went through with the example of how 1510-420 works, that estimate, depending on your county and what kind of appreciation you've seen in the market in that county, may or may not be accurate. You know, we have counties that saw a 1 or 2% increase in their residential values. In those cases, that estimate is going to be pretty accurate because those mills aren't going to float much. Vice versa, we have counties that saw, you know, large appreciation, 47, 50%. In those cases, that estimate might be a little off because those mills are going to float down to some extent. Again, as we do after every reappraisal, this is something that we're going to evaluate moving forward, see if there's a better way we can provide an estimate, whether we should even provide that estimate at all moving forward. So if you have suggestions or feedback, we're always more than happy to hear and listen to that. One other thing that you might be interested in that I just wanted to show you quickly, again, from our homepage, mtrevenue.gov, if you click on this property link and then appraisal, one thing we've recently added to our website is the median residential and commercial property values. So if you're interested in what the median value of residential or commercial property is in your county, the percent change over last reappraisal cycle and the actual dollar change, you can come out here, find your county and see what the current median residential value is, what that percent change over last year was, and what the actual dollar change in that median value over the prior cycle was. Jump back to the PowerPoint real quickly. The other site that's out there that we definitely recommend you as a property owner go look at and that you can direct your constituents to is what we call property.mt.gov. Here, a person or a taxpayer property owner can look up the actual characteristics of their property. And as we're working through our AB 26s or talking to taxpayers, this is the first thing we direct them or advise them to do is go out and look at the actual characteristics we have for your property and make sure they're correct. So here you can look up your property, you can see what the square footage is, you can see the number of bedrooms, baths we have for that property, any outbuildings such as sheds, garages, shops. So the first thing we would always advise taxpayers to check and review is whether or not their property characteristics are correct. And with that, I'm going to hand things back over to Corey, who's going to kind of just walk through a high level how we actually go through valuing property.
Thanks, Bryce. Appreciate that. Why the evaluation process is important is that when someone receives their assessment notice, the only thing that they can dispute or appeal is the value of their property and the classification. So it's important that they know that if they don't like their taxes when the tax bill comes out in November, there's not a lot that they can do about the actual taxes. So we focus on the valuation process. And there's 3 levels of review of this. Of course, at the DOR level, they can request an informal review. We'll sit down with the taxpayer. We'll walk them through the characteristics that we show for their property, how we determine their value, and then let the taxpayer determine whether they would like us to come out and visit the property and do a further, more in-depth review and ensure that all of the characteristics are right. The first thing we want to talk about is the general assessment date. By statute, the general assessment date is January 1. The Department of Revenue values all residential and commercial property and industrial land and improvements as of January 1. Construction, destruction, percent completes, land splits, everything's done as of January 1. So as an example, one of the questions we get a lot is people will go out and not only look at their own property record card, but they'll also maybe take a look at their neighbors. And the thing we get a lot is that, hey, my neighbor just built a brand new house and it's not showing up on there. It's showing up as vacant land. Well, in most cases, the reason for that is the construction on the new house started after January 1. And by statute, that new construction won't be picked up until the following January 1st. So just keep that in mind if you have constituents saying that there's missed property, things like that. The problem may be that it was constructed or deconstructed after January 1, and our records will be updated the following year. The only exception to the 2-year reappraisal cycles is forest land currently. Forest land was left at a 6-year reappraisal cycle, but after this year, it will be going to a 2-year cycle after we finish up the current 6-year cycle with forest land. So in the valuation process, we utilize 3 tools in our toolbox to come up with a value of someone's property. Number 1, the cost approach. The sales comparison approach, where we compare your property to other sales that have occurred of similarly situated homes. And then for commercial properties, the income approach. And I will point out that for residential property, we rely most heavily on the sales comparison approach. Over the last 2 reappraisal cycles, there have been an outstanding number of sales occurring in Montana. We're able to build very statistically sound models with those sales, and the majority of the property is valued by looking at actual sales, adjusting the subject property to a sale property, and coming up with a value that way. The income approach is used most heavily for certain types of commercial properties, and we'll talk about that here in just a little bit. And then finally, the cost approach, which is more of a default for us, but basically we're looking at what it would cost you to replace that property, less any depreciation that the property may be seeing. So the cost approach, basically we derive data from recognized valuation manuals such as Marshall and Swift to calculate the replacement cost new of improvements. Like I was saying earlier, we apply depreciation, local multipliers, and then we come up with what we call the replacement cost new less depreciation, and then we add that land value back to the improvement value to come up with your overall value. The comparable sales approach, the department receives sales of all properties. Montana is a non-disclosure state, meaning that if you buy or sell a property, you're not required to report that or make that information public. However, through Montana statutes, any property that sells, the buyers and sellers are required to record what's called a realty transfer certificate, or RTC, with the clerk and recorder at the time that they record the deeds. The department goes through a verification process We make sure that that sales meets the definition of arm's length and market value as required by statutes. And then if it is a verified sale and it goes into our data set, and then we build our models based on those actual sales. And then the department builds, like I said, those models with the database. A property's value is estimated by statistically analyzing the sale price of similar properties. It's usually between 3 to 5 comparables at least. If we don't have that many, we'll usually default to a cost approach, and then we adjust the sales price to make the characteristics of the subject property equal to those of the comparables. And we use multiple regression analysis in doing those studies. And then the income approach. Most commercial properties are income producing, so the income approach is most applicable to those type of commercial properties. We collect income and expense data from commercial property owners who self-report rents and expenses for the operation of the property. We develop income models for 8 primary commercial building types. So apartments, hotels, motels, retail space, office space, restaurants, mini warehouses, mobile and mobile home parks are our most common types of income models. The reason that we don't do other types is we just don't have the data to make it a statistically sound model. And in those cases, we would default to the cost approach. For each income model, the department develops rent ranges and typical expense percentages are calculated. The department estimates the market value by capitalizing the property's net income into a present worth or market value of the future income streams the property can produce. The income / profits of a business are not used to value the property. So one of the most common questions we get is, hey, I already pay income taxes on the income I earn. Why are you taxing me on that income again? What we're not doing is we're not looking at your business or your going concern and valuing your property based on the business that's going on inside of that building. What we're looking at is if you didn't own that building and you rented that building, what would that rent be? Or if you decided to rent a building rather than buying or building, what would the rent that you would be paying be? And then we take that rental income applicable only to the building, divide it by a capitalization rate, and that equals your market value. And Bryce is going to get into a little bit about quality of reappraisal, or how we know whether or not we've attained market value for properties.
Thanks, Corey. Yes, so there are standards that we try to meet and adhere to. These are called IAAO standards, or the International Association of Assessing Officers. It's again, as the name implies, international organization that puts together training materials and standards on mass appraisal. It's widely adopted by pretty much all taxing jurisdictions, not only across the country, obviously, but also in other countries as well. So one of the questions we get, or the confusion, is from people just saying, there's no way my property appreciated 50% or 40%. I think anyone who's been paying attention to the news over the last couple of years through the COVID years knows what property in Montana has done. It is shot through the roof. But again, after each reappraisal cycle, we like to evaluate the quality of the work we've done against these national and international standards. That's primarily done through what we call sales ratio studies. So basically, this measures appraisal accuracy. We're at level of appraisal again. We're a 100% market value state. So our lien date for this reappraisal cycle is January 1st, 2022. So our mandate is to value all property at 100% of its market value as of that January 1st, 2022 date. So what we do to kind of evaluate that is these sales ratio studies or analysis. Basically, what we do is we take the assessed value we've placed on that property divided by the sales price of that actual property that has been verified as a valid open market transaction by our appraisers. So this would be 1 or 100% means we are dead on. Those IAAO standards indicate that our median sales ratio should fall somewhere between 90% and 110%. So just a quick example is if we have an adjusted sales price of $440,000, our assessed value on that property is $450,000. We would take that assessed value of $450,000 divided by the actual sales price of $440,000, meaning that we got a 102% sales ratio, which would, in this example, be an indication that we're slightly above value. So looking at our current reappraisal for residential and commercial property, again, statewide, we had 17,250 verified valid sales. Again, sales that we have verified as being open market arm's length transactions. And these are within 6 months of our lien date. So again, our lien date for this reappraisal cycle is January 1, 2022. So these are sales that have occurred within six months of that date. So either between July 1st, 2021 up through June 30th, 2022. So after doing this sales ratio where we're taking those 17,250 properties, dividing our assessed value by the actual sales price of those properties, we get a median ratio for residential property of 97.42%. So again, falling well within the industry standard set by IAAO of 90 to 100%, and actually indicating that we're a little below or undervalued on properties. And that's more than likely the result of still experiencing appreciation in the market. So again, we were looking at sales up through June 30th of 2022. Our valuation date was January 1. So when we see that median ratio a little below 100%, that's probably a good indicator that there was still appreciation happening within the market. Again, we go through the same process with our commercial properties. For 2023, statewide, we had 1,602 verified valid sales transactions. Took our actual assessed value for those properties, divided by that sales price for that property, and came up with a median ratio of 96.35%. So again, well within those IAAO standards of 90 to 110%, again, indicating that we're probably slightly undervaluing property, and again, a result of more than likely still experiencing appreciation in the real estate market in early 2022. Lastly, if you or your constituents have questions, concerns, they can always absolutely come reach out to our local offices. Our appraisers, field staff are more than happy to sit down, meet with anyone, walk through their notice. If a taxpayer disagrees with the value we've placed on their property or how we have it classified, the first step is the informal review process, or what we call the Form AB 26. They can fill that out. They can provide us with any documentation or information they have to support why they think our value is incorrect. They can request a meeting with our appraisers where we will go out, meet them at their property, review that property with them. Again, making sure that we have the property characteristics correct. And a lot of times just educating the taxpayer on how our processes work. Historically, and I would anticipate this to continue, we resolve over 90% of our appeals at that informal AB 26 level. So for this year, a taxpayer has 30 days from the date listed on their assessment notice to file that appeal and have it apply to both the 2023 and 2024 tax year. We started sending those notices out in early June. They are all dated June 30th. So we post date them to allow plenty of time for mailing so that everyone has their full 30-day window to file that AB 26. If they miss that 30-day deadline, they can still file an appeal or an AB 26 requesting an informal review. It's just that that will only be considered for the 2024 tax year, and those have to be filed by June 1st of 2024. If the taxpayer is dissatisfied with the result of that informal process, then there's the formal appeal process where they can go to their county tax appeal board, have a hearing there where they present their evidence. We'd present our evidence supporting our value. That county tax appeal board would make a determination. If the taxpayer is still dissatisfied, they can go to the Montana tax appeal board. Again, we resolve over 90% of these at that informal AB 26 level. So very few appeals of our valuations actually make it into the formal appeal process at either the county tax appeal board or the Montana tax appeal board level. So that basically wraps up the presentation we had for you. Again, we'd just like to thank everyone for taking the time to attend. We'll leave the meeting open for a bit longer here. If you have additional questions you want to type in and get an answer for, we will try to get those answered. If you haven't received an answer, it might be something that we need to look into further. We will reach out to you individually if you didn't have your question answered during this actual webinar and get you an answer. Again, as Deputy Director Mendenhall said, we're always more than happy to meet with you on an individual basis, go over things in more details. Same with our local field offices. If you or your constituents have questions on your specific properties or how we arrived at the value of a property, please stop by our local offices. Our appraisers are more than happy to sit down, walk through the process, and explain those things to the taxpayer. Then lastly, there are some, again, we mentioned them briefly during the presentation. Our main website is mtrevenue.gov. Tons of good information out there on how we value property, how we classify property, the difference in those classifications. All of our forms, whether it's property tax assistance forms, that AB 26 request for informal review form, that can all be found on our website. The other site I mentioned is the property.mt.gov website. That's where you can go look up the actual property characteristics for your property, see the square footage, the outbuildings, the characteristics, just verify that those are correct on your property. The other thing that's out there that might be of interest to you is what we have certified as taxable value to each of the counties and individual taxing jurisdictions going back to, I think, 2014. So if you want to see how the total taxable value for your county or a specific taxing jurisdiction has changed over the years, that's all published out there. And then there's been a few other good resources lately. There was a great article on the Montana Free Press that kind of explained how property taxes are calculated. Definitely, if you haven't had a chance to look through that article yet, I would recommend it. And it's another good resource that you can recommend for your constituents if they have questions on how that process works. With that, again, thank you for attending. And we will leave this meeting open through the hour to next 10 minutes or so to try to answer any additional questions you might have.
So thanks, everyone. We appreciate you watching this, and we will be sending yet today a link of this recording out to each legislator, along with a copy of the slides for your reference. Want to say thank you to Corey and Bryce. Excellent job, you guys. And please do reach out to us if you have any further questions. And I also wanted to highlight, there was an op-ed in the Missoulian recently by Senator Greg Hertz that is also excellent and very informative about this issue. So let's keep the conversation going. We appreciate you watching, and do reach out to us. We'll leave this chat open for a bit more. Just make sure all your questions are answered. And thank you again for taking time out of your day. Hope you have a great day. It's hump day. Take care.